Guys, welcome back to another video. Today we are going to do a weekly market recap. We're basically going to speak about exactly what had happened over this week because it has been quite interesting as well. So we are going to speak about the main events that took place this week. Also, we're going to look at what we can potentially expect in the market next week as well. But in terms of technical breakdowns, that's going to take place between tomorrow and Sunday as always. Now, let's kick it off with the known as the known. So let's look at the markets first. The Eurofia on Wall Street followed the Fed's interest rate hike, lost it all of a few hours. We saw the stock market basically tumble over when the Federal Reserve hiked interest rates, and there was a massive concern over recession. And blue chip companies such as Home Depot, Intel, Walgreens, and JP Morgan touched their 52-week lows. Now things are going crazy for the US economy. If you look at the global economy, we had almost a lot of companies that came through which hiked their interest rates there as well. The first one we had was the Federal Reserve. The US Federal Reserve came through and they hiked interest rates by 0.75%. Now, if you've watched the previous video that I've done an analysis on that, explaining exactly why we could see the Federal Reserve hike interest rates by 0.75%. Now it says here the Federal Reserve raised its benchmark interest rate 3/4 of a percentage point, the most aggressive hike since 1994. According to dot plot of individual members' expectations, the Fed's benchmark will end the year at a 3.4%, an upward revision of 1.5% points from their March estimate. As also now, officials also significantly cut the outlook for 2022 economic growth, now anticipating a 1.7% gain in the GDP, down from 2.8% in March. So now that the US GDP was down in March, but that's a story that we're going to leave there for another day. This week it was interest rate season. Out of the blue came the ECB. So you can see here, Europe's central bank jack up interest rates to fight inflation. Now, first the US came and they hiked in interest rates. Then Europe ECB came and they said, yeah, the S&P unexpectedly also hike interest rates. Bank of England came through, hike interest rates. First it was the US, then the Europe came through, and then just when you think everything is done, Hungary came. They also came through and unexpectedly rose their into 1 week deposit rate to 7.25%. And you can see it was happening. It happened unexpectedly. And if you think that's done, Swiss franc. And if you're thinking why we had such massive bullish candles today for the Swiss franc, they also came out of nowhere and surprised the markets with this first rate hike since 2007. Then we know that the Swiss franc is considered a safe haven. Had came out of nowhere. And hike the interest rates, making people, jumping out of nowhere. So what does this basically mean for us retail traders? Now we're going to go back to what Jerome Powell had said. Now it's very important to keep in mind that after he has aggressively hiked interest rates by 0.75% as we anticipated, the outlook will always remain the fact that the CPI or the inflation slows down. In order for the Federal Reserve, for the FOMC to make a statement, or not a statement but a decision based on how high they would like to raise the interest rates, we know that the inflation or the inflation for in England is quite high as well. I can see it says here inflation painfully high and yet not had peaked. So this week it was interest rate season, as we can see how inflation is starting to spread right across the global economy. Firstly, that means we can expect some dollar strength going into next week, depending on the kind of price action that we get today. We already saw the Swiss franc had started bullying some of the pairs. If you go and look at any pair trading against the Swiss franc, you'll see how aggressively bullish the Swiss franc was, now trading at a monthly high against the Japanese yen there as well. We can also expect, not just from the US perspective, we can expect the stock market to be slightly negative there as well going into next week. but it all depends on most of the stocks are trading at he's currently trading at that life support, like I said before. So definitely some negativity, some negative data, negative movement coming through for the stock market. They're going into next week, and then we can expect the dollar to increase in value once again, depending on the kind of price action we do get today. But we expect the dollar to get strong there as well. The euro, you can definitely expect the euro to increase in value as well, because interest rates normally attract investors, but you can always expect the dollar to be the dominating currency because it's one of the most traded currencies that you can find. We're not going to talk about them, but we are going to talk about the Swiss franc, so the CHF, which is this one over here. So we can expect the Swiss franc to continue higher there as well. Now, it's very important to keep in mind that the last thing you do want to do is trade the USD against the Swiss franc, or the Swiss franc with the euro, or the euro with the Swiss franc or the USD, because you can expect all of these currencies to increase in value due to the fact that the interest rates had increased, and this ultimately attracts investors at the end of the day there as well. Now, next thing we do going to speak about is today we heard that the Federal Reserve promises unconditional approach to taking down inflation. It says here the Fed officially rolled out a strong language today to describe the approach to inflation, promising a full-fledged effort to restore price stability. It says here the committee commitment to restore price stability, which is necessary for sustaining a strong labor market, is unconditional, the Federal Reserve said in their report to Congress. Now, it really doesn't matter what Powell say, because he's been saying this for over and over and over and over and over again. However, inflation numbers had not decreased. Now, it's important to understand that that as long as the CPI increases, we can definitely expect the we can expect the bank of not just the bank of as the inflation increase, you can expect the Federal Reserve to keep hiking interest rates. So the only time we could see the Federal Reserve potentially coming lower than 0.75 next month is if we do get a lower inflation rating. If we do get a higher, we could potentially see a 1% there, but that's a discussion for another day. So next week we do have some data coming through, which is what I'm going to discuss in the video that I'm going to do between tomorrow and Sunday. But I just wanted to give you guys an update in terms of exactly what had happened this week, and it was interest rate hiking this week across 4 major banks that you can find. Thank you for your time. Stay safe. Enjoy your weekend. And as always, cheers for years.